Hello and welcome to this Open Banking Expo live webcast sponsored by Yapily. I'm Ellie Duncan, Consulting Editor of Open Banking Expo magazine. During this debate, the panel will be discussing how open banking payments can drive open finance and how close we are to open finance becoming a reality. With the latest UK open banking roadmap recently agreed with the Competition and Markets Authority, I'll be asking the panel, is it time to push the dial forward towards open finance via open banking payments? Now, before I introduce the panel, just a reminder to the audience that we will be taking your questions, putting those to the panel at the end of the webcast. So throughout the discussion, you can submit those in the attendee questions panel that you'll see on the right of your screen. All questions will be private, so no one else can see them, and they'll be asked anonymously. There is also a Yapily Open Finance white paper available as a free download from the auditorium. So now on to our panel. Our panel comprises industry experts from across Europe. Joining me today is Imran Gulamhuseinwala, Trustee at the Open Banking Implementation Entity. Welcome, Imran. Pedro Pinto Coelho, CEO and Chairman of Banco BN. Hi, Pedro.
Hi there.
Matt Cockayne, Chief Commercial Officer at Yapily. Welcome, Matt.
Good morning, Ellie.
Ali Nicknam, CEO of Banco. Welcome along, Ali.
Thank you. Great to be here, virtually.
And finally, Lana Abdullayeva, Non-Executive Director at the Participant Advisory Council Pay.UK and Director at Lloyds Banking Group, who is here as an independent speaker. Hello, Lana.
Hello, Ellie. Thank you for having me today.
So even before the COVID-19 pandemic, the rate of innovation in open banking payments was such that instant and frictionless payments were becoming more commonplace, helping to improve the experience for customers and merchants alike. The current crisis is likely to spur further innovation. It could result in more agile and personalized financial transactions that it is hoped will stand the test of time in a post-COVID-19. The Authority asked for industry feedback on its vision for open finance, and with the deadline for input having been and gone on March the 17th, the industry and consumers await the outcome. So before I start putting some questions to the panel, as I mentioned before, we do have a number of polls that we're going to be launching just to get the audience's views on various topics. I'm actually going to be launching the 3 polls now, so they'll appear on your screen. Do cast your vote, and then we'll generate the results later in the webcast and put those to the panel to find out what they think of your answers. So the first poll question is, where do you think open banking payments will see fastest adoption? Retail e-commerce, peer-to-peer payments, investments, B2B payments, or other? Poll is what's most important for using an open banking payment journey? Let's launch that for the audience to vote on now. The answers for that are account coverage, ease of customer journey, branded journey, and UI. And finally, I'm going to launch our third poll. In open finance, which sector is next for disruption? Wealth management, lending, utilities, insurance, pensions, or other? As I say, that third poll should be appearing on your screen shortly. So if you're watching, please do cast your votes. Now, many are predicting that open banking is the starting point and is paving the way towards open finance and even smart data. So as we start to look at the opportunities outside the traditional current and payment accounts, we're asking, how can open banking payments be used to drive open finance? And what stage of the journey are we at? Imran, I'm going to come to you to set the scene for us, if you will, please.
Absolutely. Ellie, thank you very much. Thank you very much for inviting me to be on here. And can I just also say, I thought your poll questions are terrific. And I, for one, can't wait to see what the audience come back with. I've got my own personal bets on which ones are going to win, but I'd love to see what the audience say. So I'd encourage everyone to contribute and participate in that. If I can just say a few words then about open banking, where we're at, and how I think it gets into open finance. If I go on too long, Ellie, just please do cut me off. For me, open banking is actually a stepping stone to open finance. I think that has been is based on a fundamental principle that the data that the financial institution holds on the individual belongs to the individual and not to the financial institution. And we think that by giving control over that data back to the consumer, back to the small business, you can actually rebalance markets in favor of consumers. So for me, it's not a matter of when, or not a matter of if, rather it's a matter of when we move to open finance. And I think the very comprehensive consultation that the FCA put together, which unfortunately has been delayed until October because of the COVID crisis, really has the potential to position the UK on a really interesting journey towards open finance. And one only has to look at Australia, where of course they've started with a vision for open finance, and open banking is just one component of it, the starting point of it. Where are we in terms of the open banking journey? Well, we are getting towards the end of the implementation. I would argue that we're about 90% finished with the implementation. The job is not yet complete on both payments and data as well. There is some functionality that needs to be built out. It's very obvious to us all now that refunds, which are not a requirement under PSD2, need to be in the open banking APIs in order for it to be acceptable product for merchants and e-commerce. So we're going to fix things like that. There's another year's worth of work to be done there. But nonetheless, the versions of the APIs are live. 99% of the UK current account market is basically using those earlier versions of the APIs. We have got between 200 and 300 authorized third parties who are building propositions on the open banking rails. Some of them have got product into market, and I'm very pleased to say that we're seeing adoption already, and we burst through the 1 million mark at the end of the year and are continuing to grow quickly. One thing I would say, however, is that open banking payments do massively lag open banking data at the moment. That's something that we're very keen to fix. I think that the payments element is going to be crucial to getting open finance to work, and there's a couple of reasons for that. I think number one is that for open finance to work, we need open banking to be a mainstream thing, and the route to becoming mainstream is through payments. Payments are where we could get many millions of people in the UK using open banking to make push payments from their accounts. The data element is always going to be a slightly smaller proportion of the population. I think payments are also crucially important with regard to open finance because they enable sweeping. Sweeping is a really important activity if one really wants to make better decisions about where they put their money, how they save, how they engage with their money better. And of course, sweeping depends on open banking payments. That's something we're going to work out how to deliver the functionality on over the course of the next 12 months. And of course, the final reason why open banking payments are so important to any aspect of open finance, even smart data, is because it's all well and good to get the insight from the data, which may then allow the consumer to determine they want to switch to a better product. But the payment is actually the so what. The payment is the call to action. The payment is how you actually engage with that other provider. So I may be told what a good electricity producer is to move to, but until the payments are part of the overall structure, I'm not actually going to be able to set up in a smooth and frictionless way. So the payments allow the so what piece. So I'll stop there. I'm very excited about where payments leads us into open finance. The Australians are figuring out that they need payments incorporated into their open banking standards. And we're at the early stages of adoption, but it's all to play for.
Thank you, Imran. And I'm going to bring Pedro in now for his view from sort of from Portugal and a kind of wider European perspective. So, Pedro.
Hi, good morning. Well, I would say that although we have seen quite a strong push from regulators to actually have banks implementing open banking, we see that effectively the outcome has not been as strong as we would expect. I would say that this has allowed account aggregation in the first instance. However, as we all know, not many clients actually have more than one or two accounts at maximum. So we do see open banking as a long journey, and this really depends, number one, on the quality of the data that is actually provided by these institutions, and number two, by the ability of having players that are coming up with good opportunities for clients to actually switch or ask for a particular product. I've seen that larger banks have been somehow initially a bit reluctant because they want to obviously protect their own market. Obviously, now that regulators are really imposing strong rules, they have no choice but to obviously open up. But we, as a player, for instance, on the lending side, and where we actually have clients that allow us to extract information from where they have their account. Initially, we saw some challenges in terms of the quality of information that we were getting, as opposed to screen scrapping. That's what we have done before the Open Banking Directive. But we believe, and we are very strongly committed to open banking, and we believe it's the right way to go. But I think there is still a long journey ahead for the client to ultimately benefit from the platform.
And I'm going to bring in Ellie as well here, just to set the scene from the point of view of the Netherlands. Ellie, do you want to do that for us?
Yes, sure. I would love to. So first of all, thanks for having me. So I've been hearing the discussion so far, and it is quite interesting. But I think one of the angles that needs a bit more highlighting is what's in it for the end consumer. And as with many new technologies, sometimes we lose sight on what's really important, which is that end consumer. And so I often ask myself, what is it that open banking will bring that end consumer, so that we are sure that we can address those needs? Now, if I look at the current state of affairs, I have to say that I don't think open banking has come a long way yet. And to me, that is because instead of driving intrinsic demand from consumers, we're trying to regulate our way out of this, which of course causes this process to be very slow, very cumbersome, and often tends to miss out on critical elements that would make such a process successful. So for example, we heard Imran say, hey, we kind of forgot to implement the whole refund thing because it wasn't in the regulatory framework. And so, we cannot do a large part of what we would like to do because it's simply not mandated yet. So I think one of the considerations that I often have is, why not empower the consumer more so that he or she can choose what is important to them? So rather than trying to regulate open banking, why not regulate transferability of a consumer between a bank or a financial institution and another bank or a financial institution, thereby allowing a consumer to pick and choose whatever is most important to them? And I feel like this is the holy grail, and this has been proven in other industries, such as the mobile phone industry, where you can simply transport your number to a different supplier. And because of this dynamic of the market, the suppliers have more and more come into tune with what the consumer wants. So I think that's one of the most important things for me. And I think once that happens and the consumers really have the power and the end say of whatever it is they want, we will see a rapid increase in open banking, and we will see standards come into play, because currently there are a couple of standards. They're not all, and I think this will ultimately benefit all consumers in a major way. Does that help?
It certainly does. I think we've set the scene really well there. Lana, I'm going to come to you next. In a recent Open Banking Expo panel debate, we talked about predictions about the future of finance and customer behaviour in sort of 10 plus years or so. You described the move towards a potential Chinese takeaway menu scenario in that debate. For those that didn't see it, can you elaborate for viewers on what the future could hold here?
Thank you, Ellie, and thank you. I'm delighted to be here with such an excellent audience and peer speakers. It's a very interesting debate. So it's a story from the previous webcast without spending an hour discussing it again. I do think, and we see that consumer becoming more digitally aware. In UK, building on Imran's earlier point, putting data in control of consumers and actually consumers and businesses alike, and customers becoming more informed and more educated. And therefore, the expectations for the value exchange is becoming more critical in the interactions of consumers and businesses. They expect the journey and convenience and the protections in equivalent of the journeys they're getting, where in the past we saw the loyalty to the relationship and all the weight of that was put on sort of single financial institutions and single bank. I do think what we will be seeing increasingly of the next decade or so, where consumers will be picking and choosing the providers of the service. And Imran also indicated the payment journey will come with that service, and that's the expectations. So if you're getting something from Amazon for £10, your expectations for the payment journey there will be slightly different to where you're getting your mortgage. And I think that's where my reference to Chinese menu was. That depends on that original service and moment of truth for consumer business, that there will be expectation of the value exchange with the appropriate provider. Hopefully adds the flavor of the previous debate.
Absolutely. Thanks, Lana. Now, who is going to be best placed, do we think, to drive customer adoption on payments? Is it going to be the merchants, the fintechs, or financial services themselves? Ellie, I'm going to come to you.
Yes, thanks. So, to continue my answer of just now, I think we really, really need to empower the consumers. And by doing so, they can choose whatever is most important for them, and the whole delivery chain will adjust. So I think today, in today's world, Banco is actually one of the companies really driving this change, although you might not expect a bank to take the forefront in open banking. We very much have. Many years ago, I believe from the top of my head, this was 2016, we were the first bank worldwide to launch a completely open, full-fledged API, which allows our users to do a whole lot more than today's regulation mandates. So if you would so want to, you could create your entire own environment on top of the API. And we have seen that us doing so has spurred a lot of innovation and a lot of cool things, from people building small things that are kind of funny and geeky, such as their Philips Hue lights changing color depending on their bank balance. And we have seen more serious things take place, such as a real-time connection with accountancy software, which is of tremendous help to our business users. So, I think if we empower the consumers to pick whatever is right for them, there are a lot of innovative companies out there in all fields, and maybe even unexpected fields, that will take the forefront towards this open banking world that is going to emerge sooner or later. Hopefully sooner rather than later.
Thanks for that. I want to bring Lana and also Matt in on this question as well. Lana, what do you think?
Right. So I will continue the stories that Ellie started, right? So from consumer perspective, and consumers and businesses alike, as it's not only individuals, they expect more personalized, more seamless, and more secure and more reliable experience nowadays. They're becoming more digital savvy, more digital aware, and the payment journeys of the past, if you like, are a little bit more clunkier, and having perhaps a few extra steps that consumer preference would be. The thing is very interesting, consumer having a different choices. When you're searching on a product online, you don't necessarily, as a consumer, think what payment method I would choose to get that thing. So as we're giving consumer choice, consumer would not be selecting the payment method. They would be selecting the product they want to receive or the service they would receive on the other end. That's critically important. We do need to give the payment journey the adequate attention as in relevance to the product or service. And I wouldn't necessarily see who has, is that merchant or is that fintech or is that the bank has opportunity to tackle that space. I think everybody has that opportunity. It depends how it kind of interacts with the relevance of the strategy. Which is important part in current digital journeys in e-commerce. And the current method usually used are card service, and it comes with certain protection on consumer behind that. So as we are moving to much more seamless experience utilizing the API connectivity, we do need to have in mind what the customer protection exists in the existing environment. Because while the customer and consumer would be looking for a better service, they typically don't want to lose what they already have. They wouldn't expect to care and lose and be aware of the protections they had with cards and may not have this account-to-account space. They would still like to see the loyalty points attached to the journey as they would be expecting. They would still like to see insurance that typically attach. So in order to be successful in fighting that adoption curve, you do need to offer a better service using technology, but not losing the benefits that existed in previous rails. Hopefully that makes sense. Back to you, Ellie.
Thanks, Lana. Yeah, it makes perfect sense. Matt, what do you think on this?
Thanks, Ellie. I'd like to pick up on Lana's point. I'd like to pick up on Lana's points there and just kind of pick up on the journey. I think it's really important about the ease of friction. And if you think about some of the things that are happening around paying by card with SCA, an open banking app-to-app journey is really going to be much smoother. And it's going to lead a lot less drop-offs for merchants, for their consumers who are trying to purchase something. So you're on your Amazon and your app and you want to buy something, going through SCA with a card is actually going to be much more complicated than going through an open banking journey. So I think that ease of journey is going to be critical about how we get this adopted. And therefore, to some extent, it's kind of incentivized on the merchant to push that as a payment method. And they're quite interested in doing so. At least we're seeing that from people who are looking to adopt open banking payments. For them, it's about the fact that it's quicker than a card payment. They get the money quicker. It's also cheaper for them. And they expect it to be a smoother journey, at least in an app-to-app journey. So I think those are the critical points.
I wonder if I could just jump in here and just give you my perspective and just touch on some of the things that other people mentioned, which I don't necessarily agree with, which I think is the point of these panels. I think for me, I'm kind of in agreement with everyone that in some regards, merchants are the key to unlocking this as a mainstream thing. It's something the card companies figured out decades ago, and I think is crucially important to making it work here. The part of the reason for that is, of course, a payment is a two-sided market, and we need acceptance at the merchant end. I'd like to pick up on a couple of things that Ali said. Now, I'm a massive fan of Banco, have been for a long time, and of course, also some of the features and functionality you've got in Holland, not least of which Ideal, which is a beautiful piece of technology with great ubiquity. For me, I think that the other issue with payments is not only is it a two-sided market, but frequently it requires a whole-of-market solution. So where I disagree with Ali is that if an individual bank offered refunds, customers may switch to that bank because it offers refunds or refund functionality in the APIs, but merchants won't adopt it. This is my experience in the UK, until 80-90% of banks provide it. Merchants need a whole of market solution. When they get fragmentation at the checkout, it just becomes too complicated for them. So I think something like refunds only really will work in the UK if we get all of the banks to do it, frankly, together. And that lends itself to the standardized approach that we've taken on here. I think one other point I'll just make in reference to something Ali mentioned earlier, which was the importance of switching or allowing customers to vote with their feet, for want of a better term. Here in the UK, we've been trying that for 10, 15 years, and still no one moves. The old argument we use is that people are more likely to get divorced than they are to switch banks. So that's something that we're just we feel we've tried that approach, and it just doesn't seem to work. My final point, if I may, Ellie, is just a reference to, I think, something particularly Lana touched on, which is that protection. Where does protection sit in payments? At the moment, customers are clearly used to some of the benefits associated with cards, which includes protection. It can include loyalty, doesn't always, but protection is somewhat standardized. And the big debate I think we're going to have to face up to here in the UK is, do we replicate the same form of protections for consumers that you get in the card space, in the interbank space? Or if we do that, do we just increase all the costs associated with interbank, and then the customer doesn't have any choice? So some really important points of principle that I know the regulators are really thinking carefully about. And I hope and expect that we're going to have a industry-wide debate around this over the coming months. So do we want to replicate the cards environment in interbank, or do we want to create something that's more different, lighter, quicker, cheaper?
Thank you, Imran, for that. I'd like to jump in here. First of all, great to hear that you love Banco. I think it's always great to hear about people's enthusiasm on all of the stuff that we've been working on, so thanks for that. I do hear what you're saying, and obviously, by definition, wide-scale adoption is far better. And indeed, you need to have wide-scale adoption for merchants to jump in. However, that's not the point that I was making. I think something doesn't need to be perfect to be better than it is today, right? So my point was that if we allow consumers to vote with their feet, as you so eloquently say, then this will push all suppliers to intrinsically start, innovating. And obviously, innovation would be towards an open banking world. And then, secondly, I guess we have the same saying in the Netherlands that people are indeed more likely to divorce their partner than to change banks. However, this was also the case for insurances. And about, from the top of my head, 10 years ago, it might have been 8, we got regulation in the Netherlands for people to switch their insurance far more easily than they could before. And it's the December month in the Netherlands. And the first 1 or 2 years, not much happened, but actually from the third year onwards, 3 or 4% of the people actually switched during that month. And although this is just a couple of percent, these moves were significant enough for the insurers to really start improving their service. So I do appreciate that indeed merchant adoption probably only will take place when there's significant, standards out there. But if we look at where we are today and, the huge gap between where we sit and what we could do with the technology we have, I think one of the easiest and lowest barriers of entry to kickstart that innovation would be to empower consumers more.
I just want to move the conversation on a little bit because obviously due to COVID-19, every single sector has had to act fast and pivot quickly to cope with the changing dynamics of how consumers engage with money and payments. There are plenty that, have major concerns about moving to a cashless society. But now is certainly the time for everyone to save on costs. So how could, in this context, how could open finance help both businesses and individuals? Lana?
I just start with a bit of stats, perhaps. We did a review, a cross-industry review, just before the COVID started. And our expectations in UK of drop in using cash over the next 5 to 10 years was about 50%. Interestingly, is that in the first weeks of COVID, we've seen that number. Would we expect to that number fix once we go back from the lockdown? And I think all the researches and trends shows that, first of all, the lockdown will be lifting gradually and there will be a new kind of norm and new reality. That pushes more cohorts of consumer to digital channels and digital distribution channels. That as a result, the predictions show while some of the use of cash may return, but definitely not to the starting point as it was before. So about 50% over the first few weeks of COVID is quite a significant number. And that indicates the readiness of the channels, readiness of the providers, but also readiness of the public to start transforming to that. So by no means I'm advocating for a cashless society. I think that still will be there, but the digital channels are proving to take significant part and perhaps more dominant part in our lives. And as we move to more digital channels, the payment journey in those channels will become critically important. So I will not repeat the first part of the conversation that, we all contributed to on what the options we have, what the challenges we have, we need to solve, what the frictions we need to remove, and what the protections we need to think of, and how. I quite, like Imran's point of, there's option not necessarily replicating what we have in current environment. Perhaps we could use different tools to achieve the same objectives. And I'm all for that, to take some good parts, but do it in a better way. Ellie, back to you.
Thanks, Lana. Ali, can I bring you in on this about, how can open finance help individuals and businesses? And also, how have user needs changed during COVID-19 so far?
Yes, of course. So one of the interesting things of being a bank is that we can see how people's spending behavior changes during a crisis. There's this one anecdote I would love to share with you. It was really funny. So as you might know, the Netherlands, and maybe Amsterdam specifically, is quite well known for its soft drugs. And as COVID emerged, the government announced a lockdown of coffee shops. Well, we could actually see that the payments at coffee shops kind of rose like 10,000% or something during that time. So anyway, it's one of those things. We do see spending has changed. We see people are saving more money. So rather than people, consumers being in financial difficulty, we can actually see that on average, people, are saving up. At the same time, I think it's mostly businesses that are having a hard time. And I believe that open banking, and which goes hand to hand with digital platforms, really help insofar, help is, possible in these difficult circumstances, but they help because you can interconnect all kinds of tools that allow you to gain deeper insight on your actual situation. And by having that information, you're empowered to react and to make decisions. So earlier I mentioned the real-time bookkeeping software a connection that we have. If you have 5 shops in 5 different places and you can monitor minute by minute what is going on, obviously you're at an advantage to take whatever measure you deem necessary. Obviously at the same time, it's open banking and digital innovation is not a magic bullet. I mean, if your shop needs to close down because of Corona, there's not much we can do, unfortunately. But I hope that helps a bit.
Yeah, it certainly does. And prior to COVID-19, we saw new innovations on a weekly basis when it came to payment initiation and processing. Matt, do you think COVID-19 will serve to really disrupt the payments ecosystem as we know it? And if so, how?
I think it's a really interesting question, Ellie. We saw, as soon as COVID lockdown happened, a lot of fintechs kind of paused what they were looking to do. However, that then quickly changed, and we're now seeing a lot of people coming to market. And if anything, it's accelerating that move to digitization and that move to new rails, from moving away from the existing payment rails that are today. And we've seen some really good examples of some of our customers who've deployed solutions around that can solve the COVID problem. An example is kind of Ordo with their neighbor-to-neighbor payment tool. And we see lots of fintechs who are bringing out innovative services looking to use payments. So I think it's really going to accelerate that piece. There's a lot of discussion about kind of that move to more of a cashless society, and is COVID accelerating that? I think the open banking payments, it will definitely accelerate how people use that. And once they start to see the ease of using it on a mobile phone as a payment method, I think that will really accelerate it. And those typical scenarios of in a crisis, you see lots of new invention and entrepreneurialism coming out. That's definitely the case here. If you look from 2008, things like Uber were born. So that's going to happen again. We're already seeing a lot of really cool things coming to market. I can't really discuss them all today, but we're seeing a lot of really interesting use cases for payments and using open banking as that change agent for it.
Okay, thanks,
Ellie,
Matt.
if I could...
Of course, jump in.
Great. I just wanted to confirm what Matt's saying. We sit in a very privileged position in the UK at the centre of the ecosystem. And I was overwhelmed at the start of the crisis as to how many good ideas bubbled up out of all these innovative and disruptive fintechs. And broadly speaking, there are some really interesting things they've come up with to do with, as Ali was saying, greater insights to help government make more decisions, work around eligibility. So people who want to prove that they were working before and aren't working now, so they can get government grants, businesses and consumers. Eligibility is a big thing. Fraud is a massive thing. And of course, when you link to people's bank data, you can see that in a lot more detail. We have something called confirmation of payee. We don't have enough time here to talk about all those things, but what open banking can do is help that all work in a faster way and a more accurate way. However, and I think Ali mentioned this again, we can't work miracles, and we can't get everything that we want to get up and running in 6, 7, 8 weeks. So what we've seen is a really a kind of a great ideas and government thinking very hard about them, but frankly, they're all ideas to build better resilience in the future. Maybe there's a wave 2, maybe there isn't, maybe there's something else, but that's where I'd see open banking really play a role. And the thing that wraps a lot of this around is digital identity. And digital identity kind of comes from open banking in a very vanilla form. You need digital identity to make open finance work, and you need so many digital identity to underpin so many of these ideas to make us more resilient and a better digital economy.
Pedro, I wanted to bring you in to the discussion. Electronic money institutions have been offering innovative services based on e-wallets and prepaid cards for some time now. Do you think they have the ability to disrupt the open banking landscape?
Yeah, I think there are certainly good opportunities, and there could be a disruption, particularly if you associate them with merchants. You know, the merchants now, they do realize that they can actually integrate payments in a way that benefits the client by giving them discounts and cashback and all these initiatives to attract them more to stores. So I do believe that in the future we'll see more and more of this type of integrations. There is a good example in Southeast Asia with Grab, a taxi app that basically uses the nature of its business to actually create an ecosystem for payments and having its own wallet, and even apart from for people to eventually keep savings there in this wallet, they also provide lending products as well. So we'll see more and more of this type of developments. I would even come to a point, and I would like to share and brainstorm this with the panel, that I believe the big bang for me is the moment where Europe will not necessarily need the two main, the duopoly, Visa, MasterCard. I do believe other markets have grown beyond that. And we see this infrastructure, with all the benefits that we have of accepting a card anywhere in the world, there is still costs associated with it. So I would say, coming back to your question, I would say e-wallets will certainly thrive. and there will have to be probably one or two or three of them that will capture the market the same way as Alipay or WeChat Pay has done in China and now India and parts of Southeast Asia. We have not seen this in Europe. We have not seen this in the US. But I do believe now with the Instant Payments Directive, there is no reason why you would necessarily have to use the Visa MasterCard rail for you to make a payment. You can do a payment from your account directly to the merchant's account. This is a very big revolution that will come. And I do believe that obviously the players that will have e-money license will be able to do this without necessarily using the traditional rails. And I think this will change dramatically the cost structure. I think right now we're still paying quite a lot for that infrastructure, and we'll see in the future this infrastructure reducing its cost and the cost passing on to the consumer, and eventually merchants willing to pay some part of that cost as long as they also get a benefit from the information gathering that the payment agencies or e-wallet or e-money license agents will gather, and then provide good information for them to position the company or the merchant according to the need of the client in the future.
Thanks for that, Pedro. Ali, did you want to chime in with just a couple of quick words here?
I fully agree with Pedro because, in fact, I think it was about 2 years ago that behind the closed doors in a session somewhere in Europe, I said, hey guys, do we really want to be dependent on Visa and MasterCard? We have instant payments now. There is zero reason to be fully dependent on one infrastructure. Not just from a cost perspective, but also from a strategic perspective. You just want to have redundancy in your system, because the cashless society, I dare to say, at least in the Netherlands, is here. I know countless shops in Amsterdam that don't accept any cash anymore. I've seen the same thing emerge in a couple of other cities. So sooner or later, we will reach that point. And then we want to be sure that we're not fully reliant on one network that will ultimately, have its disruptions and have its problems. So I fully agree with Pedro there. And I think, I'm a geek at heart. I'm a coder. I'm a techie, right? And I think a very simple way to move this trajectory forward is by introducing an open source standard, an open standard that everybody can start implementing, because it really isn't that complicated. I mean, honestly, it really isn't that complicated. We can just come up with a standard, everybody can start using it, and then before you know it, we will have a secondary network that everybody can benefit from.
Thanks, Ali. And just aware of the time, we've got some audience questions coming in. So just before we move on to those, I'm going to ask all of the panel for a very, very short answer to this question. Which markets do you think serve to benefit most from open banking payments? Perhaps each of you can name the 2 markets. Matt, we'll start with you.
So, thanks, Ellie. I think it will be e-commerce and then B2B payments.
Pedro, do you want to choose 2 markets?
I would say obviously e-commerce, and second I would say lending business, because with the lending you'll benefit from all the historical cash flow data from the client in order to make their credit assessment.
Imran, 2 markets from you, please.
For me, it's e-commerce. In payments, it's e-commerce. I think it'll be cheaper for merchants. I think it'll be faster for merchants, and I think there'll be less fraud for merchants. So that's your incentives. I think the other ones are more on the data side, and I would agree. Credit is where we're seeing the biggest application there. Unfortunately, post-crisis, we're going to see a lot more demand for that as well.
Ali, can we come to you for 2 markets?
Of course. Well, I'm going to give you a bit of a different answer because I think literally everybody will benefit from it, except for the incumbent banks. So everyone, merchants, e-commerce, consumers, everyone stands to benefit except for the incumbent banks and also MasterCard and Visa, obviously.
Lana, last but not least.
I'm not going to give a revolutionary answer. I think everybody has a chance to benefit with the right business strategies. The 2 use cases, I agree, would be around more efficient and more secure payments and definite a better funding options to businesses and consumers, i.e. lending. I quite like to give a wider perspective on the payments innovation generally. We're talking today about payments in open banking ecosystem, but let's not forget about all other changes and transformations that happens in the wider payments domain internationally. There are a number of domestic payment schemes updates, including in UK. We are looking on new payment architecture. There are a number of the RTGS programs in flight, and there's industry led and sponsored by Financial Stability Board works that targeted to removing frictions in cross-border payments world. And finally, it is ISO 20022, the increased transparency in payments transaction. So if we combine all the things that are happening and open banking payments becoming an integral part of that wider ecosystem, the opportunity to serve customers better, more personalized service is becoming just a huge greenfield. But what would be really important as we are expanding boundaries of that ecosystem and we're increasing the participants and different type of participants in ecosystem. I already mentioned the consumer protection part, but that ecosystem needs protection. So the use case that Imran mentioned in one of his comments is digital ID as accessing that wider ecosystem and platform are becoming critical both for consumers and businesses. So it's a greenfield of various use cases to take opportunity from to benefit.
Thanks, Lana. So before we come on to some questions for the panel, I'm just going to publish some of the poll results, just so you can see how everyone voted there. Where do you think open banking payments will see fastest adoption? It looks like retail e-commerce came out on top there. Then our second poll was on... hold on one moment while I get the poll results up. That was on what's most important for using an open banking payment journey. So you can see the results there. Most people thought ease of customer journey. And the final results for in open finance, which sector do you think is next for disruption? Let's see what everyone thought there. Lending and wealth management seem to come out on top there. Turning to the questions, I've got a question here for Imran. Do you think that advertising open banking benefits to consumers before it is available would drive adoption by incumbents, or is it counterproductive?
It's a really interesting point to consider as to how we engage with the public. We don't feel it's our job to promote open banking to the public. We feel it's our job to educate open banking to the public. And the reason for that is really simple, is that we aren't in control of the propositions. Open banking is only an enabling technology, and it's up to the market, authorized third parties, to develop propositions on top of that. And we think that they should be responsible for promoting it. So all in the same way that no one really promotes electricity or the internet, it's about the service providers that sit on top of it that do all that work. So that's kind of where we've landed on the debate. We just want to, if people have questions about how it works, the safety, the security, their rights, disputes, and so on, then we feel that that's our space, but we're not really here to promote.
Thanks, Imran. Matt, do you want to take this question that's come in? Does the panel think we need standards similar to the OBIE standards in order for open finance to be a success, or can the market develop it themselves?
Sure. You'd always hope the market would develop itself, but what we've seen with I guess, traditional banks' reluctance around some of the open banking things, there's the odd exception, but is that they need to be regulated to force to do it. So whilst it'd be great to see some big insurance companies and big pension companies proactively come to market and say, hey, look, we've looked at this, we're going to use the standards that have already been built for banking, and we've adapted them slightly, and here's our API. History tells us that's probably not going to happen. So when we look at other territories globally, the ones that are most interesting for us as a connectivity play are those where there's a regulatory push rather than an industry push. And so if you compare something like Canada and the US, Canada is far more interesting for someone like ourselves because there'll be regulations around quality of the API, uptime, what data fields are in it, rather than allowing the banks to do their own opportunities, some of which will be great, but some of which will be quite detrimental to the end user.
If I may to add,
Okay, thanks for that, Matt. Now,
so I think introducing the consistent API standards, it removes attention from the technology, and it makes technology really enabled to focus on the customer experience and the customer product, and offers benefits to the end customer. Where if we let the market to sort it out, that time to sort it out would take from where we could have offered better products for consumers. Also, the API connectivity gives us amazing opportunity for interoperability between different industry sectors. And driving by the consistent API standards, you achieve better interoperability and therefore better benefits for the consumers. Again, if we leave it to the technologies to compete over API standards, maybe over time it gives a more sufficient technology, but it will focus on technology rather than consumer benefits. And I think that's an important consideration.
thanks, Lana. I'm just going to ask Ellie to take one final question fairly quickly before we wrap up. Someone has asked, they wanted to find out how consumer data and privacy rights be protected and not mistreated on open banking platforms. What contingencies are in place here? Ellie?
Well, that is a great question. So to be quite frank, technically speaking, there are very little things you can do because once things are open and once you give access to someone to your data, they can do whatever they want with the data, right? So we can try to technically protect you, but then maybe they print out the data, maybe they take a screenshot of this data. So that is a bit of a concern, something that I think is a complicated question, so much so that it needs to be attacked from different angles. Technically speaking, us as technologists, we should implement as many safety valves as we can, but at the same time, legally speaking, there should be policy on what can and cannot happen with data. Because once it's out there, right? There's nothing more you can do.
Thanks for taking that one, Ali. I appreciate you probably needed more time than just 60 seconds to to answer that one. So thank you for tackling it anyway. As we wrap up, just want to thank the panel for what has been a fascinating and extremely topical discussion. Thanks to everyone who took part, and thanks to the audience for watching. I'd also like to thank our sponsor, Yapily, again, and just remind you all that the Yapily Open Finance White Paper is available to download. Also, you will be this webcast back if you weren't able to tune in live. From all of us at Open Banking Expo, thanks very much for joining us today, and we look forward to seeing you again.